Hi there, welcome to another edition of Talk Stocks. I'm your host, Caserones, and today we're lucky enough to have Dave Cole, CEO of EMX Royalty, with us today. How you doing today?
I'm doing very well, Kier. It's been a long week, speaking with a lot of investors, really enjoying it, but thank you for having me.
Yeah, we're here at the SMI, the Swiss Mining Institute conference here in Zurich, and you've been on the road hitting a few sort of different conferences. But without getting into all that, maybe you could give us a bit of an overview on EMX.
Cash flow. Yeah, you know, we've been a junior company that's been building a royalty portfolio for a number of years now, 2 decades. And we're at the point now where those royalties are really kicking in and we're getting strong production royalty cash flow. That's augmented with the good pre-production and property agreement payments that we've always had. And the two combined to put us in a situation where, you know, we're dropping a lot of money to the bottom line and very pleased to be in that position. The two kingpin assets within the portfolio that are really driving our net asset value, according to the analysts, is our Caserones royalty operated by Lundin Mining Corporation in Chile, strong copper and molybdenum producer, cash flowing to us over $10 million a year at this point in time, and they're doing a lot of exploration work there. We're very pleased to see them doing in-pit drilling, expanding resources at depth there, in addition to some other nice prospects that they have within our huge royalty footprint. Then moving to my favorite and the most valuable royalty in the portfolio is Timok, and you've heard me talk about Timok before. One of the largest copper and gold deposit ever to be brought into production in the history of Europe. And that royalty, they're just mining in the upper high-grade zones at this point in time, paying about $5.5 million per year to us whilst they're mining in those upper zones, but they're doing the development work as part of a $5 billion capex to get that lower zone in production. And they told us that we'll start to see some lower zone royalty income in 26 as they advance the block cave there. And we're very excited about that. They've initiated construction of the 125,000 ton per day mill for the lower zone. So these are all great things for us. And you know, we own royalties because we want to be exposed to discovery optionality, and there's discoveries being made throughout the portfolio around the world. Diablios in South America and Argentina. The Park Salyer deposit where we have a royalty in Arizona, the Peak discovery where we have a royalty on that new advancing copper deposit that's the lateral extension of the Taylor deposit being operated by South 32. Barrick specifically highlighted the Leeville mine in their PowerPoint presentation at Denver Gold and talked about the potential there. They're knocking off some beautiful drill holes there. And that's been a long-term paying royalty for us. We're just delighted. It's currently paying about $5.5 million a year, benefiting from strong gold prices, of course. And then, you know, the Viscaria mine in Sweden is coming online in 26, and they just announced what they say is the best drill hole they've ever had, where the A zone is meeting the B zone at depth, and because it's Sweden, they call it the ABBA zone.
Hey, good
it's,
one.
You know, it's good to have a counterparty with a sense of humor, right? So anyways, I could go on and on. You know, discoveries throughout the portfolio, increasing cash flow. That's put us in a situation where we feel the most prudent thing to do with our money at this point in time is to buy back stock. We've purchased approximately 2.9 million shares. We've erased those shares, reducing our share count substantially by about 2.5%. In addition, the insiders are smart enough to buy stock, and you know, I bought some stock here a few weeks ago, and other directors and employees have been buying stock. We see what's happening here.
Hey, excellent. And just for those of us that aren't super familiar, maybe you could explain a little bit about what a royalty is and how many royalties your portfolio covers.
Sure, I'd be happy to. So, you know, royalties are phenomenal financial instruments, and it's a cut off the top, right? Forever. Most of our royalties are in perpetuity. They're a net smelter return royalty in most cases. That means it's the gross revenues to the miner. And we get a cut right off the top, right when that check comes in, a chunk comes to us. And it's a great thing to have. We want to be exposed to the various types of upside associated with that, which we collectively call optionality. That would include commodity price optionality, which has been working in our favor recently.
Yes.
You know, strong copper prices, strong gold prices. And then very importantly, discovery optionality. So you find a whole new deposit within our royalty footprint wherein we didn't pay for those exploration drill holes. We didn't have to pay our share of the capex. We didn't have to pay for the engineers to figure out how to mine underground and expand the mine. On and on and on. And those aspects of optionality are multiplicative. Price of gold goes up, they find more gold, and metallurgists figure out how to extract more gold, the engineers figure out how to mine deeper. all to the royalty holders' benefit. That's why you want to own royalties. That's why you want to own royalty portfolios.
And approximately how many royalties do you have in your portfolio now?
Over 150.
Wow.
Yeah, and 6 of them have production royalty income coming to us. That number will expand, and the amount of income coming from those 6 will expand, because those are mines that are in the phases of expanding. And then I would point out that we have a lot of property agreement payments as well, coming across another 40 or 50 of those royalties within the portfolio have some form of advance minimum royalty payments, stage gate payments, etc. It paid off very handsomely for us over time.
And in terms of like valuation, royalty companies tend to command a bit of a premium as compared to being someone who's actually sort of exploring or just a producer on its own. Maybe you could speak to the benefits of being a royalty-based company in the mining space.
So royalty companies historically have traded at a premium to their net asset value as defined by the analysts. We're not in that situation. We're sitting here trading somewhere around 50% of our consensus net asset value, maybe even a little less. And the junior royalty companies, the smaller royalty companies, have seen a pullback over the last couple of years. I believe that will be rectified. I believe that the good companies within that group are going to excel in the next phase. And it's because of the fact that we're trading at half of our net asset value, as determined by the analysts. We are buying back stock. And that is an excellent investment, particularly given the fact that I believe that our net asset value is really driven by quality generational assets such as Timok and Caserones in Chile.
And in terms of analyst coverage, how many analysts are currently sort of covering your company?
So we've never done a brokered financing, so that's a bit of a headwind for that. But Heiko Ilhe at H.C. Wainwright has now covered us for a couple of years. He has a $7 U.S. target price on us. I believe he does a very good job, actually, of analyzing our portfolio. National Bank Financial recently initiated coverage, also shows us trading at a deep discount to our net asset value. Shane Nagel's a very intelligent man. I believe that they'll increase the target price on EMX in all likelihood as we continue to demonstrate what's coming from the portfolio.
And in terms of the exchanges that you trade on the Canadian, and you're also US listed as well?
Yeah, we trade on the TSX, which is officially our primary listing as a Canadian company, but the bulk of our volume trades on the New York Stock Exchange.
How's it been being listed on the New York Exchange when we've actually had a bit of a gold market?
See, right after we got the New York Stock Exchange listing a number of years ago, more than a decade ago, we saw the volume migrate from the TSX to New York pretty quickly, and people enjoy having the liquidity that is available on the New York Stock Exchange.
Now, you've been maybe a victim of your own success in that there's many more royalty companies around today. How do you guys, deal with the competition now? Everybody's looking to obtain royalties, get royalties. There's niche companies, so they're going after battery metals or weird sort of a wonderful metal. So there's all a raft of royalty companies, whereas when you first got going, there was just a few of you. How do you deal with that?
Yeah, so we have a great business model that puts us in a situation where we're growing royalties organically through our royalty generation activities. So we're going out, staking claims, acquiring licenses, coalescing data, illustrating prospectiveness of assets, selling them on for property agreement payments, in addition to a production royalty at the end of the day. So that is not anything that is competitive with the other royalty companies. Most of those royalty companies do not do that. Yeah, and it's that specific feature is why Franco Nevada owns stock in us. We're the only junior royalty company that Franco Nevada owns stock in. They own 6.1% of us on a fully diluted basis. And we're delighted to have them as our lender. They are a lender of our long-term debt. And we also have a joint venture with Franco Nevada. So our relationship with them continues to augment. I believe it's mutually beneficial. And but coming back to your question, it's no secret that royalties are phenomenal financial instruments. So we have a lot of competition. I don't bemoan that. That's just a free market, and I believe in a free market. But we have the luxury of adding royalties continually. I'll add 30 royalties this year from our royalty generation activities. So I can be picky about if and when I buy a royalty, I'm going to make sure it's a royalty that fits into our portfolio nicely and is distinctly accretive.
Excellent. Maybe we could wrap up a little bit here in terms of what would be some of the catalysts that investors should watch out for if they were to...
I think the biggest catalyst is on page 6 of the Zijin quarterly report, they said that they will make and announce a major, large, high-grade gold and copper discovery on the Cukaru license in Serbia, south of the existing Cukaru mine. We know where that is because we're observing carefully the satellite imagery, and the last satellite image that we have from September shows 12 drill rigs, 12
Wow.
drill rigs turning simultaneously, drilling vertical holes on our royalty footprint. We believe that they're on to something significant. They would not have stated it in their quarterly report. We do not yet know how big it is, but we do believe it's substantial.
Hey, excellent. Well, I appreciate your time, Dave. Thank you.
My pleasure.